You're watching Global Business Report with me, Michael Wilson. Now, South Africa is edging closer to recession. Its economy contracted 1.3% in the second quarter, hurt by a sharper than expected slowdown in mining and manufacturing industries. President Jacob Zuma is said to have described the country's economy as sick. Early this year, he outlined a plan to revive it, but the big problems like power outages, electricity tariff increases, rising labour costs and weak consumer and investor confidence could be insurmountable in the short term. The current market turmoil has put a lot of sub-Saharan markets under pressure, but there are some opportunities for investors. Jonathan Kruger is from Africa Merchant Capital, and he joins me now. Let's talk about South Africa first of all. I know it's not your main area, but are you as worried as its president is about what's going on there?
I think, Michael, definitely. There's a lot of concerns over South Africa and a number of factors that are driving the low growth. I think there's exogenous factors and endogenous factors. I would say if you look from the outside, commodity prices, South Africa being a major resource exporter is certainly putting pressure on the economy. But then there's also areas, labour strikes, which certainly hamper the economy. So I think internally and externally, the country is facing severe headwinds.
And it is one of the most liquid, it's the most sophisticated market in Africa, certainly the most sophisticated stock market in Africa. When that starts to fail, does it cast a shadow over the rest of what people actually feel about Africa, right or wrong?
I think, Michael, it depends who you're speaking to, and if you look at the correlation in the markets, I think the countries that are considered commodity exporters as well are closely linked to South Africa, such as Nigeria. But then if we look at other countries such as Kenya or Mauritius, their economies are not connected to South Africa, but more the global economy. And I think the global economy and risk sentiment plays a bigger influence in those countries.
You talked about headwinds. Let's examine some of the fallout, perhaps if we could, from China and sub-Saharan markets. What have you noticed in particular, apart from the obvious?
Yeah, I think China, the major influence it's had is over commodity prices, and that translates into certain African economies. And certainly lower growth foreseen in China has caused a lower oil price, amongst other factors, and that's caused a sharp sell-off in Nigeria over this last year on the back of lower oil prices. And then I think also just a general risk-off environment has put pressure on frontier economies across the globe.
But for those that risk-off means you don't want to take too much risk.
Yeah, that's right. Yeah. So, for example, we've seen that in Kenya, where we believe the underlying economy is doing very well. Corporate earnings are coming through strongly on certain sectors, yet the market has come off a lot. And we believe that's purely on a risk-off sentiment, and we see that as an opportunity.
Indeed. Let's talk, we talked about Kenya and the corporate earnings, which have encouraged you. Let's talk about Nigerian bank earnings. What have they indicated to us?
They've certainly surprised the market. If we look at I'd say the higher quality banks, GT Bank and Zenith Bank, we've seen them come out with their half-year earnings. GT Bank, in fact, keeping their earnings up or rising by 20%, and this certainly surprised the market. The share rallied on the back of it, and the management are confident that they are managing the credit risks and growing in the areas where there's lower risk, and keeping the non-performing loans down. So that's a positive story. And Zenith Bank, very similar opinion.
Are those your criteria when you look at bank stocks, about how that sounds pretty obvious, doesn't it? How they actually manage the debts which just happen to go bad? You know, you can't help that, can you?
Yeah, most certainly. We look very closely into where are the banks extending credit, and we look at the various sectors. Is it the upstream oil sector, downstream, general commerce? We look into those loan books to see where will potential non-performing loans come from, and look across the banking sector, where are the safest banks, and is there sufficient upside going forward in the bank to justify taking the risk.
You're very keen on MTN, aren't you, in Africa, and the way it's actually moved forward, Rwanda being a good example. Where else is it going that you'd like to follow it?
Well, I think we're positive on MTN in certain countries. And Rwanda, if you need to strip out certain of MTN's operations. So as we discussed earlier, South Africa is facing severe headwinds economically. But if you strip out, say, the Rwandan operations, they recently did an IPO of that subsidiary, and that's been going incredibly well. Investors earned over 30% since the IPO. And then there's talks of a Nigerian listing, and I think that'll largely depend on how the Nigerian economy turns out. And then certainly MTN has been very successful in its rollout of a number of countries, including Zambia. And we certainly see that they're taking positive steps on the
To
continent.
sum it all up, Jonathan, right where we are now, when you look at a portfolio, just give us some of the briefly some of the standout things that you look for if you're going to include something in that portfolio.
I think we look at portfolios on a bottom-up basis, and what that means is we look at individual stocks and we try and identify stocks that are performing well in good economies as well as bad economies, and is there sufficient upside in the stock. So what we've seen recently is that there's a number of Kenyan companies that are growing their earnings strongly. We've seen in the insurance sector, we've seen some of the banking stocks that have been resilient. And with the sell-off in the market, we've seen a good opportunity to enter the market. In Nigeria, although there's pressure economically, we've seen certain sectors and we've identified certain companies on a bottom-up basis. And then we also like to diversify the portfolio, say, into countries such as Mauritius, Namibia, Botswana, and some other West African countries. And that just diversifies your risk across the continent.
Jonathan, more on that next time. Thanks very much for the moment for joining us.
Thank you, Michael.